Okay, we should be live and good to go. Good evening, morning, afternoon, whatever's applicable. Hope everyone had a nice weekend. Let me know if you can hear me and see the Bitcoin chart in front of us. Not that it's changed much in the past couple of days, but hey ho. AV good, very nice. All good, yo, when moon. Nice. Okay, sweet. We've got plenty to talk about. So let's begin. First things first, thank you to Blockfolio, the sponsor of Technical Roundup, the YouTube channel, as well as the weekly newsletter. Go to blockfolio.com for all your spot mobile trading needs, as well as portfolio tracking and management. So be sure to go pay them a visit in the links available in the description below. And if you're new here, first time watching from Twitter, whatever it may be, go ahead and subscribe to the channel, like the video, do all that normal algorithmic slavery that we kind of have to adhere to for the purposes of the survival of this channel. Obviously being a bit hyperbolic here. Okay, cool. Let's talk about things. We'll start with the newsy side of matters. And it's all, in this case, the news is also very much related to the price action. And broadly speaking, altcoins have been on a tear. That's where the opportunity has been. Last Monday markets video, I think the title was "Altcoins Look Ridiculous" or something like that, and that was because the indices, all of these altcoin indices, were breaking out and looked very strong. And as a result, we had a week of altcoins pretty much across the board going up, which is awesome. But now we're approaching Coinbase week. I think Thursday is the day for the direct listing, and so that's part of the reason I think why Bitcoin volatility has been so low, been so crushed. And I kind of want to discuss the IPO itself and then just the market conditions more broadly. So if we open up our little discuss tab where we talk about the news, I think this is a really good thread by Larry early on when Coinbase dropped their Q1 earnings and outlook. And, there's a summary and some data points. Just very briefly, so Coinbase is going live, right? Like, it's going public, but there is a slight difference between an IPO and what Coinbase is doing. It's mostly, in my understanding, a technical difference. Like with an IPO, you have all these underwriters, they work with the company, and they help decide the initial price and line up investment banks and all that type of stuff. Whereas the direct listing doesn't have that. But either way, the end product is the same, broadly speaking, of the company becoming public, right? Now, US equities are hot generally, and I mean that not just in terms of the S&P 500 going up, but you have more and more speculative vehicles gaining just a ton of market share momentum, and that's where all the narratives are at. Like, I'm sure some of you have heard of SPACs and, ARK ETF, which is also very speculative if you listen to some people. Like, it's a great market now in terms of froth to get these really high valuations for investor FOMO, etc., etc. And I think one point that this thread makes very well, or very clear, is that there's a large, like, the timing can be better for Coinbase because crypto tends to be cyclical, right? So, like, their numbers, I think in the first quarter of this year, they made more in revenue than all of 2020 or something ridiculous like that. So it makes sense timing-wise why you'd want to go public in that type of context. But the issue that comes with that is once you start projecting those first quarter financials to be the company's sort of baseline financials full stop, that's when I think you risk arriving at some unsupported conclusions as far as profitability and revenue projections, etc., as far as those things go, right? Not to mention that a large, or at least a non-trivial portion of Coinbase's revenue is related to fees. And we know that over the past year, there's kind of been a race to the bottom as far as fees go in traditional markets, and crypto's sort of probably going to move in that direction as well, especially if you want a retail-oriented crowd. Like, it's no secret that Coinbase is pretty expensive for the most part if you want to not transact, but specifically buy and sell crypto. So that means those revenues are going to have to come from somewhere else, maybe an expansion of the institutional arm, whatever it may be. But the broad point is, like, the market's been playing a trade in crypto as a proxy to this listing, which is to be long all these exchange tokens, so BNB, FTT being the main ones. And a lot of the arguments that are being made in support of that are essentially extrapolating from Coinbase Q1 earnings to some extent. And there is some danger in that, in my opinion. So yeah, good thread here. I'm going to link all I talk about in the chat for you to check out. I'll try to put it in the description as well if I remember. And so that's kind of what the market's waiting on in terms of Coinbase. Now, as for the actual trade, if there is one, when the coin ticker, I think the ticker is actually coin, which is pretty awesome, when it goes live on Thursday, like, to me, it's not entirely clear. I'm going to be completely honest. It's not entirely clear. I don't think it's like one of those bell curve types of trades, because intuitively, the argument you want to make immediately is that if the listing, if it goes live and number go up and there's a strong bid, then Bitcoin's going to break out and keep going. And then if the investor appetite is low and the listing doesn't go as well, then Bitcoin, it's Wednesday. Okay, I'm wrong. It's Wednesday, not Thursday. Thank you, Pretty Panda. But basically, like, the whole bell curve meme as for the trade, it's like listing goes well, number go up, Bitcoin go up. Or investors aren't as hot for it, or demand is lower than was predicted, number go down, and therefore Bitcoin also go down. And to be completely honest, I'm not really sure that automatic correlation makes a whole lot of sense. I think generally speaking for Bitcoin, markets, at least crypto markets, don't tend to top on like really low volatility. If anything, towards the final blow-off leg of a cycle, volatility just gets really fucking high. And that's kind of the paradox. It's the most profitable, but also the hardest to keep in terms of profits stage in the market cycle, that final kind of blow-off leg where everything goes apeshit, but then everything nukes as well. So if you manage to even keep a small fraction of what you make during the blow-off leg, I mean, that's already awesome and an achievement in itself, right? Whereas in this case, I mean, volatility has been really low, and so it's not hugely suggestive of topping conditions. But I think what both the technicals and the fundamentals seem to suggest is that the market isn't clearly decided on how to respond or how it's going to respond to Coinbase going public. At the very least, I'm not seeing like a whole ton of evidence of it being priced in one way or another, because it's basically just moved sideways. So that's something to keep an eye out for during the course of this week. I don't think it's going to be instant, like, okay, it goes live, Bitcoin nukes, or, that's it, breakout, buy it, etc. I'm personally expecting some sort of settlement cool off type of period just to see how the market responds, and then we can expect clarity from Bitcoin. But generally speaking and technically speaking, it doesn't look toppish to me, but there are some things that will change that, which we'll discuss when it comes to the TA side of things. A bit sort of flat on that side, but that's kind of what you get. You've got a big event coming up. It's not entirely clear how it'll affect flows to crypto itself, and so it seems like that's what the market is waiting for. The listing trade has been not in Bitcoin, but in altcoins, specifically the exchange token narrative. So it's not like crypto has been completely immune to this listing or just gone sideways as the news has approached, but it just hasn't been reflected in the majors, which is fine and makes sense in my book anyway. So we'll see what's up and what how that will develop. No strong views quite yet. I don't know if you had time to see this before the stream. I mean, come on. NYSE NFTs is that kind of where we're at now. I don't really have a lot to say. It's just the question that I have is why? Like, what's the point? It seems like not every facet of crypto gets a lot of mainstream traction, right? That's an important thing to bear in mind. Like DeFi, for example, is awesome, right? Like these are compared to like masternodes of 2017, 2018, whatever, those so-called passive income instruments, whatever. DeFi actually works. It's genuinely pretty innovative. And I think that's got a future. But it failed to penetrate the mainstream because the UI, UX, user experience, it's just too early. It's not there yet, right? And even the specter of C DeFi, like you get the DeFi experience via centralized exchanges, that also failed to really materialize in any meaningful way. I know like FTX has lending. You can stake certain instruments on a lot of these centralized exchanges, but there hasn't been that meaningful breakout into C DeFi or DeFi reaching the mainstream quite yet, right? So there are clearly some corners in crypto, as meritorious as they may be, which basically fail to reach or appeal to the normies. Now, NFTs are like the opposite of that. It's the corner of crypto, which is almost like a gateway drug to crypto, and it's becomes immediately accessible to normies and relatable to normies. And of course, it helps that a bunch of celebrities see it as a meaningful cash grab opportunity and use that to spread it to their normie audience as well. So I really think that's all this is. It's a part of crypto which is accessible to normies and became popular and just like any other viral trend. And as a result, we're seeing, big brands, celebrities, just like the real world, try to stick their foot in it to some extent and get some sort of foothold. I don't really see the value of looking at these things and saying top signal. I'd rather look at the chart as well as some other stuff. But mainly, if I'm going to be making an argument for bearishness or profit taking, it's not going to be always 100% TA based, but I need those things to come into alignment sooner rather than later, right? Like, what's the point if you keep saying, oh, top things or sentiment is so bullish, etc., or expecting some sort of reversal, but the market keeps creeping up? That's how you get wrecked, right? So if you're getting early inclinations of these are things that are happening in the later portions of the market cycle, if that's going to be a high conviction trade or bet or reallocation, rebalancing, whatever, for me, I'm not saying the technicals need to immediately look bearish and for there to be perfect synergy between the two, but some sort of confluence is necessary for me to build a high conviction position. So, bullish setups maybe slowly need to start failing, or lower time frame breaks in market structure, whatever it may be. I need some sort of synergy between those two things. Because if we look at this sort of stuff, we've had top signals from like 2017 for the most part. Not 2017, what I'm talking about. Since 17K, all the kind of celebrity stuff, normie shilling, all the 2017 top signals have been around since 17K, and clearly they weren't all that useful because we're at 60K now, which is why patience or waiting for some sort of confluence, alignment, etc. Generally makes sense for me, at least, if I'm looking for any meaningful trade. So yeah, this is interesting. I don't want to read too much into it. It's cool, I guess, but it also serves to reinforce the thesis to some extent. The NFTs are like at the moment, in terms of what's available to crypto, obviously there's Bitcoin and NFTs. Those two things seem to be the normies' gateway drug to crypto. I mean, Dogecoin to some extent, but generally, altcoins have been pretty unimpressive as far as attracting new retail flow to the market. So that's that. And then on the final note, before we dive into the full TA stuff, a cool little project that Donald and I kicked off. It's called Degen Drops. We have like meme crypto shirts and hoodies. We're not building an empire or trying to do anything massive. We sell a few t-shirts and hoodies. All the profits go to the FTX Foundation, and FTX and the foundation itself will match any money that we raise towards that endeavor. So just pretty cool thing. There are some cringy designs, some less cringy, some CT specific, some not CT specific. We're just having fun. It goes towards a good cause, and it's an easy 2x on whatever we raise, courtesy of the FTX Foundation. So why not? We're in a bull market. Bitcoin's at 60K. It's been a really tough year for most parts of the world, I imagine. So might as well do something good and have some fun while doing it. Bring some memes to life. As for my favorite one, or favorite ones, I quite like all of them. The Gains, Pains, Repeat looks amazing. I've got this one like at home. I also like the buy dips, sell rips. That's kind of what the green and red arrows is what you get on FTX when you trade on there. So that's cool. And make it all back, of course, depending on where we are in the market cycle. Always going to be important. But yeah, if you've got some money laying around, you want to give something to charity and get something for it, Degen drops all goes to the FTX Foundation and they'll double up whatever we raise. So cool little charity project. Check it out if you have time. If not, that's cool as well. So I'm going to link it in the chat again, and I've got it's my main tweet right now, so go check it out. Yeah, that's kind of it on the fundamental news, whatever side of things. It's really just waiting for Coinbase and seeing what the market does. Again, altcoins have been the trade for the past week, and that's something I think a rotation that we caught quite well from last week when we said that all of these indices look outrageous in a good way. Exchange coins were the primary beneficiaries of that, led disproportionately by BNB, which is pretty cool. And now I think is when we wait and see what the market does. So from a TA point of view, I want to look at the weekly and the daily timeframes on Bitcoin to start. So none of the weekly closes have been particularly concerning at the moment, right? So if we look at, the market's obviously slowed down from how it made its way up here. That's fine. But on a closing basis, in terms of closing below resistance, etc., the closes have been fine so far, right? So if we take this highest close here, this was the kind of deviation, overthrow portion, whatever, and then that's currently acting as support, right? All the weekly closes have been above it. This one broke down, wasn't accepted, you get a tall wick, and then the next couple weeks, straight back above it. So that's good. And then even if we take a more recent level, like this range high, right, on this highest close, it's a pretty much a similar story. You get a weekly close that doesn't look great, but then the buyers step in, and the more recent price action is accommodating or seems to be treating that area as support. So on a weekly closing basis, even if you use, if you want to use the further back resistance or the highest close before this little pullback, the weekly closes are above these levels for the time being. So no immediate cause for concern for the moment, right? Now on the daily time frame, you kind of see the same story with this sort of 59K area. And what I mean by that is I want to talk about two structures. One is this old range high here, right? This top. And if we just box out the whole thing, you can see the market pretty much bottomed perfectly at the lower boundary of that range and is currently trading above it. So if you want a high time frame directional bias sort of deal, is as long as we're above this range high at whatever that is, 56, 57, the market looks fine. Right? Now, I do think we have more recent levels to work with, which I'm using to inform my context. But if you want your kind of zoomed out picture, as long as we're above this previous range high, the market looks fine, generally speaking. Now, my focus is on slightly more recent levels on the daily time frame, which should be no surprise. I like recency. And specifically, it's this area here, right? At around 59K. Now, after we had a big nuke, this is the top of the range, right? And you've got really clear, even just judging by the wicks, resistance in this area. That's also where the last meaningful sell-off came from. But at the moment, the market's trading back above it as well. Now, I'm not blind. I'm fully cognizant that this so-called breakout candle isn't exactly the most bullish candle in the world. You've got tall wick, didn't completely obliterate the structure. And the move that followed from this level found resistance at the highest close. Closer to 60K. But again, I can only work with what's in front of me until it isn't. And putting those two contexts together, we know that the weekly time frame has been closing above resistance or holding support, which is fine. And now the daily time frame as well. From the available evidence, we had a big cluster of resistance at 59K. And most recently, we've been closing above it / treating it as support. So generally speaking, the levels that I'm looking for in pretty much for this week and with all this news hitting the wire, etc., highest close resistance and so-called psychological level over 60K, so kind of 61K thereabouts, etc. I generally don't like using previous all-time highs as resistance, but if the market's going to use that as its range high, who am I to protest? And then on the support side of things, this breakout above 59k, previous level expected to act as support. So that's really my basis for directional bias. I think if we lose this breakout here and it ends up being some sort of deviation, and so this is the high, and then we fail to find support at this weekly and daily sort of shelf, that would be short-term bearish. It would signify a kind of daily time frame failed breakout. We don't really get many of those, not in this trend. So if that were to happen around a big piece of news as well, that would be a decent signal to de-risk to some extent. And then the closest levels in that case would be this daily lowest close, over-under type of deal, range low, whatever, at 57k, and then all the other weekly levels that we discussed prior to that. But really, if I could only have one line, which I don't really like doing, but hypothetically, if I had to use one structure to set my directional bias on a daily time frame for this coming week, it would probably be this 59k. Resistance, like a lot of congestion, and then we like an unpersuasive but break nonetheless above it. I really don't want that area lost on a closing basis, because bull markets aren't really for this kind of failed breakout-y type of shit, and if that happens, that's sort of a signal in itself. Does that make sense so far for Bitcoin? Okay, sweet. Yeah, that's sort of it. I think if I go to my actual marked up perp chart, that's sort of what it looks like. It's actually exactly what it looks like. Whereby it's that same present range high at around 61, and then we have a confluence of weekly and daily levels in that same breakout shelf type of deal that we talked about moments ago. So if the market's really bullish, this should be a valid break, support, poking at the all-time high, and then expand through it. What I don't want to see is this area fail, because yes, it would mean that we have a daily breakout failing, but it would also at this point mean that the weekly support is failing to do its job. And accordingly, the nearest supports on the move like that is your kind of 57k, 55 as the range low, and then, you know, whatever, level by level at that point. But obviously some levels are more important than others. In this case, we have a confluence of weekly, daily, plus more recently higher high through 60k. So I really don't want to see that lost. I'll probably de-risk a fair bit if we lose this. As for shorter term trading, pretty much level to level, anything goes for the time being. So that's Bitcoin. That's kind of the best way I can summarize Bitcoin. We have an okay-ish daily breakout. If the market's good to go, we shouldn't lose breakouts. Generally, if the market's bullish, you shouldn't be losing breakouts. If you do, that's the time to play carefully. Now, let's talk about Ethereum, which looks slightly worse than Bitcoin. So on a weekly basis, there's absolutely nothing wrong with this chart, right? Again, it's all the context that matters. The most important weekly bit of structure is we have this weekly range high. The market closed above it, and we're currently above it. The only way ETH would start to look dicey is if we had a weekly close below this range high breakout, so kind of below 2K. Then we're probably in for a slightly bigger pullback, right? Because again, it's the same old rules just applied on different charts. If the market's bullish and you get a breakout, generally speaking, the best breakouts will just send, right? You get a breakout and then the market just sends. That's what you want to see in a bullish trend. And then on the barely acceptable side of things, well, not really barely acceptable, but at least for crypto, the less time that's spent around the breakout, the better, right? So if this is if you're correct that this level is important and the market does break it on the appropriate time frame, you just want it to get the F away from this area. There's no reason to get stuck there, right? The market's slowing down or getting stuck there or getting sold into, etc. All of those are some form of red flag, early warning sign, whatever. You really just want to see it rip away once the big level's broken, much like Bitcoin did when all-time high broke. And as soon as you start getting this kind of deviation-y pattern and falling back below where it came from, that's definitely a change in behavior which should alert you to being careful, right? So taking that on Ethereum weekly, I think you can reasonably apply it to this, or you can even just take the whole candle and do that, which is I think what we did in the newsletter. And the basic premise is we have resistance. We had the top of the range here. We look at what the market gives us, strong weekly close above it, and so anything, the less time that's spent at the level, the better. Generally speaking, we just want to see continuation higher. Anything below this high time frame breakout is unfavorable, unacceptable, whatever varying degree of outrage is acceptable to you. Now, the daily time frames, like, it's just not pleasant to look at, but at least the levels are clear. It's just the price action is slightly less acceptable. So you've got a pretty clear range. You've got the highest close here, and then the lowest close here. And so you had an effort to break the bottom of the range on this day here, and then it got bought up very aggressively, right? So failed breakdowns are bullish, and then the market made its way to the top of the range. And that's currently where it's at, sort of congestion, going through this congestion or being stuck, just like Bitcoin, which had its breakout and is also being stuck. It's like on a daily closing basis, like it's technically fine, right? You had resistance, close above, retest, maybe, but you can hear my voice go up like a couple of octaves, and it's because this doesn't really look like the most persuasive breakout in the world, right? Even in terms of prices, it's just stuck at this level. I would be like hard pressed to call this candle like a breakout through resistance. It's just too close. There's not enough space between the level we want to break and where the candle closes to really definitively call it a breakout. So it's not like it's just chop at resistance is probably the more reasonable interpretation, but I think the same rules apply. Generally speaking, I don't want to see weakness or daily closes below the range high, because then we have that whole pattern of, just like here, it's basically the opposite of what happened at the range low, right? You get an attempt to break down. If it gets bought up, it'll probably go higher. So you can apply the same mirror logic to resistance. You have an attempt to break. If it fails, it probably goes to the other side of the range, which in this case would be support closer to 2K. So that's kind of all I've got for ETH. Range high off of this highest close, range low off of this lowest close, having an attempt to break out through the upper boundary. It's not entirely clear whether it's successful or not, probably will become more clear in the next couple of days. If for any reason you get meaningful, so enough space between the close and the level, meaningful daily closes below resistance, at that point, we're just trading the range, right? Range low attempt, no dice goes to the range high, then this would just be the range high attempt, no dice goes towards the range low until the market finds acceptance one way or another. But for the time being, chop at resistance is probably the most reasonable daily time frame view that I can offer on this. Does that make sense? So just to be clear, I'm still exposed to the market. I'm still in. I'm not hedged or anything like that. I'm just waiting for clearer evidence to emerge as the market kind of churns around these high time frame structures. Okay, nice. Just wonder if I'm missing anything. Not really. Not really. And yeah, you can even see I've got this lowest close, which is sort of a midpoint between the range high, where we're at now, range low, and this kind of falls in the middle as the little base before this move up. So I'm happy to trade intraday, level to level, within the range, but for me, it's that whole, this is the breakout, came back, it's just been churn at this daily level. It's not entirely clear whether it's made its mind up in terms of acting as support or acting as resistance. Whenever it's gotten a bit too far away from the structure itself, it's just been getting slapped down back into it. So I think it needs a bit more time to offer something clear or meaningful, in my opinion at least. Neil, if the site is getting stuck, so it's Teespring, so it's not like our site. We're using Teespring because we just started. Try an incognito tab or try via mobile. Those two things tend to help a little bit. Now on the exchange coin side of things, I knew I was forgetting something. Had this hourly level. Yeah, look, BNB is the beneficiary of a couple of concurrent narratives. Not only the exchange coin narrative as kind of the number one or major crypto exchange. So obviously the run up into the coin or Coinbase listing is going to benefit BNB as an exchange coin. But also Binance Smart Chain has been going apeshit as participants continue to be priced out of interacting with ETH smart contracts, participating in DeFi, whatever it may be. It's just a lot cheaper and easier to gamble with the lower fees on Binance Smart Chain. So those two concurrent catalysts have really propelled this thing to where it is now, right? Now, I don't have a whole lot of... The thing is, when we do these live streams once a week, right? So I like to look at high time frame stuff so that it can remain applicable for several days after the live stream, or at least tide us over until the next one. Also, let's get to 100 likes. Let's not joke around. Yeah, so I like to use higher time frame stuff to tide us over and keep some relevance as the week goes on. Now, in this case, the nearest high time frame structure that I can reasonably come up with is all the way back at 400, right? I mean, maybe this breakout level, but the last time price actually went sideways before up is here. And that's a casual, in terms of where it is from the high, that's like a 40% pullback, which is a lot and not something I expect in the near future. So then you're forced to confront that same old trade-off that we discussed in the previous video, that you essentially, if you want to join a trend like this and trade continuation setups, you basically need to use lower time frames, because nothing on the higher time frames is likely to get tested anytime soon, and a lot of the time you'll just be stuck waiting for a rounded retest as the lower time frame traders eat your lunch, right? So the risk with that is, so using low time frames, right? Like low time frames, and by that I mean like intraday, so 4 hour, hourly, etc. So the positive side is you can trade. Isn't that awesome? Because unlike the higher time frame stuff, you actually get levels of support resistance that are close to market and that are useful to you at the place where the market actually is, right? That's the benefit of using these low time frame intraday structures to join these really strong high time frame trends, is that you can actually fucking trade them. That's awesome. Now the downside is that if caught, right? If you get caught, you get wrecked. A lot of the time, quite badly. So let's say I'm trading, like let's say our nearest daily support, like a big high time frame pullback, is just going to make up a level. Let's say it's here, right? Like it's this blue line. You know what? Let's actually make an accurate version of this. So daily, where is daily support on a chart like this? If we're being generous, it's here. Until we get some sort of new range formed up here, if we're talking high time frame pullbacks, there's probably nothing before 400. Now that doesn't mean it goes back to 400, right? For example, if the market moves sideways here and then breaks out again, well then we have a new daily support formed as a result of this range. But if we look at the market right now, just for illustrative purposes, that's where daily support is right now. So let's say you're trading this intraday time frame and you're like, okay, well I've got hourly support here, and then I've got a breakout level here as well. And so on the way up, you've been rewarded by adhering to a lower time frame system. And I know that because I, like an idiot, didn't trade this range low, which I had a plan to do because I thought I might get this entry instead. Typical bull market being greedy type of bullshit, right? But anyway, let's say the market starts to pull back and you start buying your intraday levels. Like you buy this, and maybe you even average into here, which I don't recommend. And instead, the market just goes straight for this fucking daily level. So the risk in trading lower time frame levels in a strong higher time frame trend is at some point, the higher time frame trend shift kicks in. So the market moves from... Hold on. So this is what I'm talking about. So you've got like a big level here, for example. the market breaks, and then you get these sorts of pullbacks, right? Let's say the market looks like this. Just as an example. So in these pockets or windows, one sec. So in these windows, if you're trading lower time frame, you're printing, right? If you're waiting for the higher time frame retest, you've got your whatever. You're not participating in the market. Same here. You get a small low time frame pullback. Is it good enough for the high time frame guys? No. Low time frame guys print. Same thing here. Market pulls back. Low time frame guys print. High time frame guys dick in their pants. Same thing here. But then eventually, these mini legs, you end up buying one of them, expecting it to work like the ones before it, and that's when you get your higher time frame correction before it goes absolutely apeshit. Now the issue is a lot of traders just don't adjust in time, so they buy the shallow pullback, rewarded, buy the shallow pullback, rewarded, buy the shallow pullback, rewarded, buy the shallow pullback, don't cut in time, boom, psych, it's a higher time frame pullback, they get absolutely fucked and licked at the bottom. Finally, the higher time frame participants who've been locked out since here get to trade this damn thing, and then it goes and fucking 10x's, right? So the way you get fucked in a market like this, which is seemingly far away from anything, relatable on the higher time frames, the way you lose everything, you give everything back to the market, is by not recognizing when instead of a lower time frame correction, you've entered something that's aimed at the higher time frame guys. So that's really the most important thing there. So your options are, I'm either going to be patient and wait for some sort of larger range to trade before the breakout, or wait for the massive rounded retest. So if you're a high time frame guy, those are your options. Or you're going to say, you know what, I'm going to buy all these shallow pullbacks, but the second it stops working, I'm going to get the fuck out of the way, because for all I know, this is the big one before the huge move, right? So those are your options. So how do you engage something like this? 1, trade low time frame, and GTFO if break, right? You're not averaging, you're not knife catching, you trade the shallow pullbacks. The second it stops being shallow, you get the fuck out. Number 2, which is your kind of middle ground, is you wait for high time frame range or new high time frame levels to form, right? And then number 3 is mega patient, mega pullback. Like, those are your options, right? You're either trading the low time frames, these little blue legs, and setting expectations accordingly. You're waiting for new price action to form because you don't want to trade the small legs, but you don't want to wait for a pullback either. Or you have to be mega patient, and when you get your big, scary market-wide correction, you go absolutely balls deep, all in, basically, to catch that macro do-or-die trend continuation. These are the sort of rules of engagement in strong trends, in my opinion, at least. Does that make sense? Is that useful? Do you kind of see what I'm getting at? If we can get 200 likes, I would smile for half a second and feel like something meaningful was achieved. Yeah. Kind of what Phil did. Yeah. Okay. Awesome. So yeah, just to be clear, what the second example would look like of wait for new price action to form is for price to like enter some sort of range here, right? So you would have, maybe like a red candle, green, pokes about, whatever, and then breaks out. That's period of new price action at this range high. That becomes your new area to trade, right? That's sort of what I mean by number 2. Shit just needs to move sideways. Remember, support is not built diagonally for the most part. It's, if you want, at least the way I trade, support is built horizontally. So yeah. That's my take on BNB and a lot of these coins which have gone up a lot. Uni also just completely shredding the market. This is a really strong move. If the daily closes through all of these highs, I think there's a pullback trade to be had. And interestingly enough, I think it's kind of telling that a lot of DeFi pairs are popping off, Uni, Sushi. Now, I'm not entirely sure whether that's a kind of delayed rotation as part of the so-called exchange token play, or whether it's a rotation towards DeFi more generally. And the reason I state that is if we look at our overview, like Alt-Perp, this is your altcoins, they went absolutely apeshit. And again, if we look at when the last Monday market was, it was on the 5th. So we were here when we said the altcoins look really good, and then everything outperformed, which is nice, right? So this is dinosaur coins. That's where the market's at. Mid perp went up a lot. Sam coins went up a lot. Exchange perp, mostly driven by Binance, went ape shit. Shit perps slowed down a little bit. Privacy, okay. But the weakest index among all of these was DeFi perp, because even relative to its range, it didn't really expand, extend, break out, whatever you want to call it. You know, however you want to delineate this range high, it's difficult to argue that the market, at least in comparative terms or relative terms, pushed far away from that range. But it seems to be doing that now, right? Especially if we get a daily close here through all of these recent highs, that's kind of a break from balance as far as these things go. So if this is a DeFi early rotation, I think that's when your blue chips kick into play. You know, your Aves, your Unis, your Sushis, etc. I'm generally a fan of going after the strong stuff, which in this case, probably Uni as far as these things go. I mean, Aave as well, but structurally it doesn't look as good. I know it's up, whatever. This is kind of the folly of the bull market. Like, I know it's up a lot, but if it's the kind of move, if it's a sectoral rotation, then 20% isn't that much, especially if it pulls back. So for me, if this DeFi rotation thesis, whatever, is correct, I'm going to need two things. The first is for Uni to basically close above everything. So above this highest close for sure, which looks super likely on a daily basis. And then hopefully / ideally, maybe this might be spurned by Bitcoin volatility, some sort of pullback towards its prior high in the 30 area, more or less. So daily candle, anywhere up here, which completely shreds the structure, that's great. And then if it wants to be nice and return and give me some sort of very quick wick, again, I'm no hypocrite. I'm totally cognizant that big breakouts shouldn't be spending much time, or ideally any time back where they came from. But I mean, that's how I trade. I trade at structure at the end of the day. So boo-hoo. Any sort of wick, quick visit, kiss and go back into the 30s, that would probably be a reasonable setup for me to act on. And it actually incorporates the lesson we had on market structure, where you have if you have a high which precedes a lower low, but then a higher high follows, right? Low, high, lower low. You're expecting a lower high somewhere, but instead you get a higher high, right? High into a higher high. Once that happens, the original, or the preceding high before the higher high is where you generally expect your support to be formed. And there's a whole video on market structure on my channel, which is worth watching. And that will basically be a model that's broadly applicable to Uni market structure. High, low, lower high, lower low, finds resistance, but then really impulsive break of that level. So this is the high which preceded the lower low. Strong resistance, break that. If you want to come back here, be my guest. And I think in terms of stop placement, or at least in validation, obviously any closes through or back below this cluster would be shitty. And obviously, if you want hard stops, probably thrust candle here. More than reasonable, because if this gets engulfed, that's not really a market where you want to be long, if that makes sense. So on the altcoin side of things, that's mostly where my focus is. I'm monitoring how exchange tokens are going to do. With Coinbase finally going public. I mean, part of the reason is because I have an irresponsible amount of my net worth in FTT, but we don't talk about that. So that's part of the reason I'll be watching how exchange coins do. But on the altcoin rotation side of things, I want to see if this DeFi breakout has legs. And the main proxy I'll be using to make that assessment is Uni, because it's the strongest. Does that make sense? Asher Wilson says, 164 likes. This is more embarrassing than ETH's last 13 failed breakouts. I agree. So yeah, that's kind of my focus for this week, for the time being at least. Uni, sushi, yeah, being the big ones. People ask my XRP. I don't trade this coin, but obviously worth paying attention to moves like these. So I think I'm going to borrow from Donald here, where he basically said that XRP, and I agree with him, XRP USD is pretty interesting because it broke everything, right? Any reasonable level of resistance that you may have. What's the oldest pair here? Is it the USD pair Binance? There must be another one that's older. Is it the Stamp Polo ones, I wonder? Yeah, that makes sense. So if we look at the daily chart, the breakout from this consolidation just broke absolutely fucking everything in terms of resistance, right? All of this was basically XRP underperforming altcoins, while DeFi and other stuff was doing really well. And now this most recent move just completely crushed everything in terms of resistance, right? Obviously made a higher high. If you go all the way to this level, right, any kind of highest close, it's just crushed everything. So I'm not... XRP isn't always easy to trade. A lot of the time you see like these sorts of impulsive moves get full retraced, and a lot of the it's ranging a lot, etc., etc. But I'm not an idiot, right? It went sideways for a long time, and now it went up a lot and smashed everything in its way. I'm not going to look to fade this or be bearish, and generally speaking, I expect it to make its way towards its USD all-time high, as many altcoin pairs have done. If it wants a quick, dirty pullback, the closest level I can reasonably think of in terms of the technicals is around 90 cents. But I think in this case, the so-called psychological support closer to $1 is where I expect buyers to step in if there's any sort of dip. So for XRP, I think the high, its USD all-time high, generally looks vulnerable. If the market nukes, it pulls back to support whatever. The nearest I've got is around $1, if not slightly higher. Does that make sense? And Tron, very similar in that regard. I'm going to mess this up again. Is this... What's the oldest Tron chart? It's not the Binance one, is it? Okay, it is the Binance one. Tron is very much in the same regard. Shout out to Crypto Kaleo. The market moves sideways for a really long time. It underperforms everything for a really long time. And then it starts ripping from that really long consolidation and closes above everything, right? Like you take this, you get an early flip of that there, but even this most recent daily close, the big impulsive one, it's like, where is resistance on this chart? Even if we take the extreme up here, that's been broken, right? So again, the same thing applies where the high, the USD all-time high, looks vulnerable, and generally speaking, I don't expect that to be resistance in a strong market. So as long as it doesn't form its, kind of textbook bullshitty, deviation back below, etc., which I generally don't expect, it's kind of the same as XRP. Like, if I get a candle which just breaks everything, I'm not going to fade it in the middle of nowhere. It just makes absolutely no sense. So broadly expecting it to trade towards its USD all-time high, and then probably beyond if the crypto environment is accommodating towards altcoins continuing to move. I want to check Solana because I literally forgot. Yeah, a bit more on the sideways side of things, but It's hilarious. Like, I kind of pain post with Gainsey, where I'm like, oh man, BNB just keeps outperforming FTT, and I'm irresponsibly exposed to FTT, but I have very little BNB, right? And we kind of pain post, like, oh, why is FTT so slow? Why is it not moving? And then you look at this, and then you're like, oh, okay, maybe it's fine. Maybe I'm an idiot. Like, oh, this isn't good enough. It's not bullish enough. Like, are you insane? just bull market things when you complain about something like this. Serum was, I think some of my mates were buying Serum dips as well. Oh, I can see why. For Serum, for those that care. Oh, isn't there a new Seco index as well? Yes, time to add that to the indices. Let's go. We get new toys to play with. Isn't that great? Seco, which sounds like a corrupt government regulatory body, but there we go. Seco, we'll put that under Holy Perp. There it is. The Serum ecosystem pool token rather. So if we go to the USD pair of, oh no, I'm an idiot. Here, broadly speaking, the big breakout, I think CBS was shilling this setup, which worked really well. No surprise there. You basically had just like a big level through here at around just under $7. The market broke it, retested, and put in another leg. Generally speaking, I think we can just take the liberty of boxing out this whole post-break consolidation, specifically its upper boundary and lower boundary, and saying as long as this holds, all-time high plus looks vulnerable. Anything below the range low here, so below the lowest close, probably not so good to go. Yes, there is the inconvenience of you'll be stopping out arguably into support, but a lot of the time really good breakouts have a similar anatomy whereby you get a big level, right? Market comes in, whatever, breaks it, pulls back, retests, mega bounce, impulse consolidation, right? And then as it starts to pull back, a lot of traders are looking for a retest of the big level itself, but more often than not, you've already had it, right? It's already happened. And your nearest support isn't down here. It's actually the consolidation which formed after the big level was flipped, especially if the market's really bullish. It'll find support earlier than you might want, right? So again, you already had the flip of the big level. And the consolidation which followed the reaction to that often ends up being your nearest support, or at least the support you want to be aware of. And it's a similar type of deal here. Similar, not exactly the same. Like, we've already had the break of the big level and the retest, and the market went up from there, and then you have your consolidation post-breakout, really. That's really the main point. Consolidation post-breakout, and that's your nearest support for these things. Not necessarily a retest of the level itself. So that's kind of Serum. $6 to $7 is the nearest structure in my mind. That's sort of all I've got. I think I've covered the main themes. You know my Bitcoin levels and what I'm watching in terms of price action. Coinbase, broadly speaking, we have a daily breakout of sorts on our hands above 59k. I don't want that to be lost. Below 59k, I get cautious, with the nearest support being 57, and then it's kind of a level-to-level play from then onwards. But broadly speaking, we had this area of congestion here. We've closed above it. I don't want to see that lost. That's my take on Bitcoin. On the ETH side of things, similar basic premise of churn around high time frame levels. We had highest close resistance at 2130s. It looks like a break and retest, but the candles are just so close to the level, it's not hugely convincing. If this area fails to act as support, then the range midpoint is the first trouble area at 2k, well, 250, 260, and then the actual range low at closer to 2000 itself. But broadly speaking, level to watch in terms of high time frame closes and what's nearest to market right now is 2130, 2140, this highest close here. At the moment, it's just chop at the level. I really want to see some evidence of imbalance and one side taking over more so than the other. On the altcoin side of things, monitoring how exchange coins react to Coinbase. They've had a nice run up. I have spot exposure to FTT irresponsibly, really not much in the form of BNB, no leveraged positions, etc., etc. The more pressing altcoin narrative that I'm watching is whether a rotation, like whether this breakout in the DeFi perp is just going to continue, and this is just a sectoral rotation within altcoins. So DeFi pairs have my attention, and within DeFi pairs, I want to look for relative strength. So stuff that's doing well. I have a list. I press the change button. It shows me what's strong. Uni, Sushi, Aave, etc. Looking at Uni, if this is a breakout through all-time high and just a complete structure smash, a pullback into the low 30s for a very short time, a quick wick into there is probably a trade that I would look to take, assuming this daily doesn't turn into a total scam. That's the best summary I can do. Like the video if you learned something. Wink, wink. Yeah, I hope that's somewhat relatable, interesting, educational, whatever adjectives you like to use. Oh, and as for whether the Coinbase stuff is bullish, bearish, neutral, etc., the answer is I don't know. And it doesn't seem like the market knows either, so I'll wait and take my guidance from that point. We talked about BNB for a long time, actually. Jump back, I don't know, 20-something minutes, and we talked about how to trade BNB. And yeah, let me know. We've got a few minutes. I'm not rushing away. Let me know if you've got any questions in the meantime. Which aren't chart requests. Plans for the week? Watch this, I guess. See what the market does. We're at a very important point. Probably some of the biggest news of the calendar year so far. So I definitely want to be around and in sync for this sort of stuff. Do you think with DeFi oracles could run too? Yes, they could. I assume you're thinking Link and some other stuff. Definitely could. It's just for me the setup is far less clear than say with something like Uni. What's the lowest time frame you trade on? Ooh. Depends what you mean by trade on. Execute, manage. For the most part, I'll try not to make decisions on anything below the hourly time frame if I can, but sometimes I do. I mean, a lot of the time you have to realize I don't wait for candle closes, right? I'll just stick my finger in it at a level and then see what happens. So the time frame question is like not immediately obvious in terms of answering it. But I trade around high time frame structure, so I like to give it the respect that it deserves in terms of time to play out. So anything much below the hourly much too often is a bit overzealous. Zetro says, if we take long on daily structure, what time frame should we close the long, for example? Broadly speaking on the daily, but the more experience you have, you can probably jump down a couple of time frames. Like you enter on the daily and then manage on the, 4-hour or 12-hour or something. But yeah, I mean, if you're new here, press the subscribe, like button, whatever. Also, just a leak for those watching Monday Markets. We have another podcast episode to be uploaded this Friday, and it's with Kyle Davies of 3 Arrows Capital. So that'll be a really good episode. We'll be sure to ask him some spicy but also useful questions. So watch out for that. There's something to listen to towards the end of this week. If you've been missing out on the Technical Roundup podcast, interviews, whatever, you should really catch up. Just to provide some context, I don't like podcasts. I know it's ironic that, of course, you don't like podcasts except your own, but generally speaking, I just feel a lot of the time that when I try to listen to podcasts in the past, like especially in the last like year or so, a lot of the guests would kind of be wasted and it would just be so casual. You'd get these amazing traders on and they're spending like 30 minutes explaining how they got into crypto. It's like, I don't give a shit how this person got into crypto. Give me alpha, give me a framework, give me tools, teach me how to trade, you know, talk to me about how you think and process markets, etc. So for me, kind of trading podcasts were always super frustrating because I felt like the interviewer quality was really bad and just chit-chatty. So with Technical Roundup, Donald and I sit down, we listen to other podcast episodes, we read their writing, and we ask really targeted questions to try to get as much like useful, long-standing information as possible. So that's kind of my long version of, you know, I'm not like other girls type of deal. If Technical Roundup, if you haven't listened to any of our episodes, give it a shot. There's very little fluff. So yeah, that's all I've got for this week. Newsletter comes out tomorrow in 24 hours. trletter.com. Be sure to check that out. Sign up. It's free. It's free forever. Also brought to you by our wonderful sponsor, Blockfolio. Charts, analysis, 1 email per week. No spam, no bullshit. That comes out in, 24 hours, as I said. Then the Duck has got his live stream for Wednesday, and then Kyle Davies' 3 Hours Capital interview on Friday. So plenty of stuff going on, plenty of stuff to get involved in as well. That's all from me for the time being. Thanks for hanging out, and I hope you all had a nice weekend. Plenty to look forward to in this week ahead. Take care, and I will see you later. Bye-bye.